So let's see some specific details of GST. This is Anurag, your host on this channel, who wants you to remain au courant and hence keeps creating content. So you can follow me by subscribing to this channel. In GST, a lot of people have asked me that what is this definition of aggregate turnover? So this includes taxable supply excluding reverse charge, exempt supplies, what you are exporting out of the country, be it goods or services, even interstate transfer to the same PAN. So in case a company is making a lot of transfers, the transfers per se may make it eligible for registration beyond the threshold of 20 lakhs. So it is very important for us to understand what exactly is the manner in which the law defines aggregate turnover. If you look at composition scheme, what they have done is that the aggregate turnover got to be less than 75 lakhs. The tax cannot be collected from the recipient of supply, so the buyer will not be paying any GST whatsoever, and the seller will not be able to avail any input tax credit. What is the situation in which there is no scope of composite scheme? When you are supplying goods, only then you will be eligible under GST composition scheme, but not under services. In case you are supplying goods which are not liable for tax, in case you are supplying goods through e-commerce operator, where the e-commerce operator is collecting tax under section 52, goods which are notified to the government, specific goods, or when you've got multiple registration numbers having same PAN, unless all opt to pay tax under composition level. So it cannot happen that the West Bengal arm of my business opts for the composition scheme while the rest of India pays GST in their normal circumstances. Actionable claims other than lottery and transactions undertaken by central government or state government or local authority in which they are engaged as public authorities. What's the rate of taxation? For manufacturers, it is 1% of the turnover. For supplies under clause 6b, it is 2.5%, and other supplies it is 0.5%. So 2.5%, I think it's for the restaurant business. Now, if you come to the valuation rules, the idea is that simply it should be transaction value, where it's at arm's length, the transaction is between unrelated parties and price is the sole consideration. And just like the previous regime, in case value cannot be determined under section 15, then there are valuation rules which come into the play. Rule 1 says it should be either of the following in the given order: 1, open market value, total of the consideration plus amount of consideration not in money. So I might give jewelry which is not money, so it's money plus the jewelry. Supply of similar kind and quality of items, so what would be the value that will command, and the consideration money plus the money value of consideration as per rule 4.5. So then 4.5 will come in to determine what will be the value ascribed to the consideration which is not in money. For rule 2, where it is between related parties other than agent value, then it will be open market value, value of supplies of like kind and quantity, and as per 4.5. Rule 3 says when supply made or received through an agent, then it will be open market value or 90% of the price charged by the recipient to his unrelated customer for supplies of like quantity. And rule as per 4.5 in that. Rule 4.5 is simple. 1, in case of cost base, it will be 110% of cost. So the government assumes that you will make 10% margins. And then rule 5 is the residual method for determination of the value of supply. Rule 6 goes for a specific situation where you are buying, selling foreign currency. So in that case, what will be the value? It will be your buying rate, let's say 66 for the dollar, and the RBI reference rate which is 65. So it is 1 into $1 lakh. So the valuation of the transaction will be rupees 1 lakh. In case RBI does not issue a reference rate for that transaction, so that pair, it will be simply 1% of the INR that you received or provided. And if the currencies exchanged are not in INR, again it will be 1% of the lesser of the two amounts, 1 and 2. Now, in case you book tickets, please remember that it will not be the entire fare amount, but 5% of the basic fare, which will attract GST for domestic bookings, and 10% of the basic fare for international bookings. Now, in domestic bookings, there will be 2 rates, one if it is business class and the other if it's economy class. Life insurance business, it will be the gross premium charge from the policy holder reduced by the amount which the companies such as LIC allocates for investment, or specified percentage of premium in the first and subsequent years. Then rule 6 continues and we say that in case you are buying selling second hand goods, it will be the selling price minus the buying price, and ignore the buying price if this whole amount is negative. Coupon voucher. So the voucher is a piece of paper. Its valuation will be the 1500 rupees of goods that I can buy at Big Bazaar against such voucher. And notified supplies under entry 2 of schedule 1, value will be nil. Valuation 7, in case of pure agent, it will be the cost incurred by the supplier as a pure agent of the recipient, which shall be excluded from the value of the supply. And rule 8, the rate of exchange of currency other than INR for determination of value will be the date of transaction with respect to such supply. What is the RBI determined date? Simple. As far as the time of supply is concerned, for goods, if it's attracting reverse charge, it's going to be the date when I actually receive the goods, or when I make the payment as entered in my books of accounts, or the date when the payment is debited in my bank of account, even though I make the entry later, or the date immediately following 30 days from the date of issue of invoice. That will be the time of supply for determination of liability of paying tax. For forward charge, it's going to be the date of issue of invoice, or the last day of issue invoice of under section 31(1), or the date on which the supplier receives the payment, earlier of 3. For services, again reverse charge, more or less the same rules, and for services under forward charge, again almost the same. It's just goods get replaced by service. So it's the earlier of the two events when the invoice is issued, or the date when I am receiving the payment, or the date I am providing the service. And then there are exceptions such as vouchers, then what is going to happen, and so forth, the other cases. As far as place of supply of goods is concerned, if the goods are imported into India or exported from India, then look at a situation where the goods are imported into India, then the location of the importer. So if I am importing it into India from Germany, so the place of supply will be Bombay. If I am exporting it from India, the place of supply shall be Germany, where I am actually supplying the goods. In case it's an Indian transaction and supply involves movement of goods, then the location of goods where the delivery terminates. So if there's a transaction which starts in Gujarat and ends in Bengal, it will be Bengal which will be the place of supply. In case goods are supplied by transfer of documents, the principal place of business of the third person on whose direction goods are supplied to another person. So if the registered office of the company is in Lucknow, and that is where this, in course of transfer, I have just exchange the bilty, so then it will be the registered place of the third person where there is no movement of goods, location of goods at the time of delivery. So if it's within the godown, I am simply selling the godown, then it will be where this godown was located. If it's assembled at site, where this assembly or installation happened, and so forth. In case of supply of services, in case it is in India, it will be the location of the supplier of service and recipient. As a general rule, if it is to a registered person, then it will be the location of the registered person. In case it is non-registered person, then even if he is not registered but I have his address, it will be his location of the recipient. In other cases where the recipient is unregistered, I do not have his address, then it will be the location of the supplier. And then there are specific situations which the Act talks about. As far as place of supply of services is concerned, where the recipient is outside India, take the case of services with respect to specific services such as banking, then it will be the location of supplier of the services. So if HDFC Bank supplies a service, it will be HDFC Connaught Place branch. In case it's provided in relation to goods, it will be goods required to be made available for providing services to the supplier. Good tax credit is concerned, the idea is that ITC should be available when you use supplies in furtherance of your business. You have an invoice or an equivalent document, you've received the supplies, the tax which has been charged has actually been paid to the government, and returns have been furnished under section 39. What is the credit restricted to? It's inward supply used for business vis-a-vis other businesses. So it will be that normal rule where, let's say if I've got total supplies of 100 and taxable supply is 80, then I can avail only 80% of my input tax credit. When it is non-eligible, when the payment is not made within 180 days from the date of issue of invoice, and then I can avail it when the payment is actually made. In case it's a capital goods and I have claimed depreciation on the tax component, then I will not get input tax credit. The last date for getting ITC is the date of furnishing return under section 39 for the month of September following the end of financial year. Ineligible supplies under section 17.5, and after 1 year from the date of issue of invoice, in case of new registration, I will not get it. And yes, there can be transfer of import credit in case there's a change in constitution, and you'll have to reverse the credit in case you opt to pay tax under section 10. So you want to go for the composition scheme, or you supply capital goods of prime or plant and machinery on which ITC was taken. So you had taken a plant machinery, availed ITC, and then you sold off that plant and machinery. Then you have to reverse that ITC. When you're sending goods for job work, even if they are sending the inputs or the capital goods directly to the job worker, it will be a deemed supply. And in case you have not received the capital goods within 3 years and not received the inputs back in 1 year, then you'll have to reverse it. ISD, that's the corporate headquarters, for example, will have to distribute credit in a pro rata manner. We'll have to issue a document for this, and the base will be the percentage of turnover in a state or union territory. As far as the returns is concerned, the penalty is 100 rupees per day up to a maximum of 5,000. What are the returns? Annual returns, again, it is 100 rupees per day, but a maximum of 0.5% of aggregate turnover. Monthly returns will be GST 1. I got a specific PPT for this again, which we have uploaded around 10 days ago. But yeah, the idea is GST 1 by the 10th of the month. GSTR 1 after the reconciliation is done 15th to 17th. GSTR 2 is the inward details, and then GSTR 3 is the final return for the month after the net payment. Then in case other assessees, non-resident taxable person, input service distributor, person paying tax under section 10, 51 and 52, then what is going to happen is ISD will file a return within the 13th of the month. Composition levy, it's only a quarterly return within the 18th of the month following the quarter, and non-resident taxable person 20th of the next month or 7 days of the last date of registration. That's fine. The annual returns for normal assessees will be in GSTR 9 by the 31st December of the next financial year. For persons liable to pay tax under composition scheme, it will be 9A, again the same date, 31st December. And then there are miscellaneous returns. First return between the date when you are liable to registration and the date on which registration has been granted. And then a final return once you cancel your registration. After a notice is given to return defaulters, then where a registered person fails to furnish return under section 39, 44 or 45, a notice shall be issued and you then have to pay the return within 15 days. Assessment, there are 5-6 kinds. One is self-assessment, where you assess yourself and furnish a return. Then provisional assessment will be happening based on the bond on a request made. And then there can be a case where there is scrutiny. In case you not file return, the professional officer shall assess the liability within a period of 5 years from the date specified under section 44 for furnishing the annual return. Unregistered person will be to the best of the officer's judgment, and then in some cases they have the power to go for a scrutiny, which is the tough part. Audit, the government can opt for audit by the tax authorities, where the commissioner or any other officer may undertake audit of any registered person. At the place of business, 15 days prior notice has to be given, and it has a limitation period. You have to complete it within 3 months, further extendable by max of 6 months. And then you will be informed about the findings, and if tax is in question, it will be recovered under section 73 or 74. And in some cases, the assistant commissioner can offer a special audit. Again, 90 days plus 90 days will be the thing, even if the accounts have already been audited. A lot of offenses Offenses related to invoice transportation, what exactly it is? It is where you've made a supply without invoice, false invoice, or bills issued without any invoice, or transports taxable goods without document cover. When you've collected tax but not paid within 3 months, where you fail to deduct tax, let's say you are an e-commerce supplier, where you have taken or utilized ITC in contravention of the act, you obtained a refund fraudulently, you falsified or substituted financial records, produced fake accounts, furnished false information. The idea is that you wanted to evade tax, then you've not obtained registration even when you were supposed to, or you were using registration number of someone else and issued invoices. You obstructed the officer, did not maintain books, etc., etc. Then a lot of challenge will be there. 10,000 or an amount equivalent to tax evaded, tax not deducted, not paid to the government, ITC availed wrongly, fraudulent refund, etc. It may go for prosecution where it's 5 years and fine for amounts exceeding 5 crores. Between 2 to 5 crores it is 3 years plus fine. For 1 to 2 crores it is 1 year plus fine. And others it is 6 months plus fine. Then tax not paid, short paid or erroneously paid, or ITC has been availed or utilized. If it's a fraud, then higher of 10,000 or tax due, and in case others it's that the fraudulent intent is not there, it is 10,000 or 10% of the tax due. Now the transitional provisions is, as far as migration is concerned, you make a provisional registration on the appointed day which gets converted into a final registration. Whatever is the credit as per your returns filed, you carry it forward in GST. Where you are moving from an exempted to a taxable zone, or you are moving to composition scheme, the credit of the closing stock. Unavailed input tax credit on ITC, you can just carry it forward under GST. When you receive goods after GST or services after GST, you take the credit in the GST regime. In case of centralized registration, transfer the SENVAT to the same PAN. When you've not paid, so when SENVAT is reversed, then in case you have then made a payment within 3 months, then you can avail ITC. And input service distributor received before GST allowed. So that again goes forward to the next regime. Job work reversal, in case not returned in 6 months, the goods, then the details of stock need to be necessarily given. Otherwise, you will have to reverse the GST. As far as return of goods is concerned, good returns from registered person, it goes into the new regime. From unregistered person, you get a refund in case it's returned within 6 months. In case services are not provided and you've made the payment, then the amount to be refunded again by the government. For revision of prices, it will be the SENVAT or ITC reversal in case it's not within 6 months. Goods sent on approval, tax payable if returned after 6 months. Deduction of TDS, no deduction if TDS liable or deduction in existing law, and etc. So those are the nitty-gritties of it. Thanks. In case you got any questions, please leave behind in the comment section. While I am not an expert on GST, I will endeavor to get in touch with my professional experts and solve your queries. Thank you so much. Please like, share and subscribe to this channel.